What's going on, guys? I want to highlight a trade that I just took now on my Top Step X account with Top Step. And the reason why I wanted to make this video right this second is because I just exited this trade. Now, I want to break down, what was I looking for in order for me to take this trade? And first things first, I want to start off by saying, full disclosure, I'm trading nothing more than 2 to 3 micros. The only reason being, okay, right now at this period of time, I trade a lot of 50K accounts with Apex, with Top Step, with day traders, and with Top One futures. They're all 50K accounts. For me, they're just easier to pass, making that $3,000, and they're a little quicker to get to payout. Nothing against the bigger size accounts, but the thing is, was when you're trading these $50,000 accounts, we don't have that much drawdown. We've got $2,000 or $2,500 worth of drawdown. So in volatility like we're experiencing lately, it's a little hard for me to trade my normal position size of 1 or 2 mini contracts, because if we look at this 5-minute chart, we look at the ATR, which is average true range, which is down here at the bottom of the screen. We're looking at 75 points on average per 5-minute candle, swing high to low. Okay, now is every candle going to be 75 points? No, some candles can be larger, some candles can be smaller. But I have to take into account right now that if there's a potential for this to swing up and down 75 points, realistically, I might be in drawdown 30, 40, 50, 60 points, and the move necessarily might not be wrong. It just might be consolidating before it actually starts going to my target. So between trading 2 and 3 micros, you have to think about it like this. If I risk 75 points, right, which again, I know it's really scary because a lot of people out there on social media and YouTube are going to preach, no, you want a 10-point stop or 15-point stop, or, you want to get 5 points or 10, you want to make 20 points, but you want to risk 5 points, right? It's just, in this type of environment, it's not really going to happen. Okay. It's just, you're going to end up chopping yourself up. You're going to end up getting stopped out a lot more. So in trading, it's always about a game of adjustments. We always have to constantly be making these adjustments. Now, a few months ago, there was a period in time where I was risking 10, 15 points to make 5 points, just firing off these quick scalps. As this volatility started to increase, I noticed that I was getting stopped out on a lot of these moves, even when the move was going in my favor. So that's kind of the backstory. Let's get into the trade that I just took here. And actually I want to pull up my drawing tool here because it's going to help me a little bit more. That way I can kind of write on the screen and it can show me show you guys exactly what I'm looking at. Okay, so just give me a second while my drawing tool starts to load up here. Just give me a second here. Give me a second. We're back. Oh, what happened here? I don't know why I had to restall the whole thing. Anyways. Come on. Give me a second, guys. Give me a second. Today is currently April the 8th. So if you are, depending on when you're watching this video, you can always go back and back test this work. Again, I'm a huge advocate in back testing work because it helps you get a clear idea of what exactly you want to see going forward in the live markets, right? Is this drawing tool not going to work today, or is it not going to work today? Anyways, okay, while I get this set up, I'll be ready for the next video. But anyways, what I'm looking at here is we had a nice push up off the open. Okay, so we had a nice push up off the open. Then we kind of had some consolidation. We failed to kind of make a new high, and then we started to pull back. Now, here's our classic 20 SMA play that we go over a lot, right? We go over a lot on this channel. This is not the trade that I'm going to be talking about. However, I did take a short on this, so just kind of make a mental note of that. If you want to back test that trade, 7:45 Pacific Standard Time, look at that. Look at the range. It was an 80-point range. Again, you're going to have to do the math on how many contracts you were willing to risk on this potential trade. But the trade that I wanted to kind of go over was this trade here. After we kind of made this push up and we pulled all the way back, losing this 50 SMA, we pulled into this support here. We had a little bit of a reversal. Now, on this little bit of a reversal here, we started to bounce, and what I was looking for was two areas, the 50 SMA and the 20 SMA. If we were to close over this 20 SMA, I would have leaned a little bit more long-sided bias, as that closure over this 20 SMA here could then pull back and then consolidate and then continue to go higher. What I was looking for was to stay below the 20 SMA, but stay rejected around this 50 SMA. So in between the 20 and the 50 to stay rejected. Once we got rejected here at this 50 SMA, you could see this little bit of a doji candle. You might want to call it an inverse hammer candle. As soon as it started to pop below the 50 SMA, I had a clear area where I could try to target a short and either use one of two areas as a stop loss, okay? Or actually three areas. So let's break this down. I could use a stop just above this wick here, okay? I could use a closure over this 20 SMA as a stop, or I could use a 1 ATR, which is around 75 points. Now, because I'm trading micros, you know, even if I was to lose the worst case scenario of 75 points, we're talking about $150 a contract, so a $300 loss. Not that big of a deal when you're talking about on, you know, what your drawdown is. Now, if I was trading one mini, two minis, you know, there's no chance, there's no shot in hell that I'll be able to risk that much. You know, the counts would be gone, they'd be blown. So as we get rejected here below this 50 SMA, I just throw a short position in here, guys. You know, I'm not trying to be picture perfect. I don't need to have an exact dollar amount. I just need to throw my short on here because I can do math, right? A dynamic stop loss where I can do math where I've got three potential outs. Three potential outs where this is telling me that this trade is no longer going to work. That's going to be a break and hold over the previous wick. That's going to be a closure over my 20 SMA, okay? Or it's going to be 75 points hard of my ATR. So a little bit of choppiness, a little bit of drawdown. I think I went down, you know, 15, 20 points as it started to wick up here, and then it starts to fall. And as it starts to fall, I'm looking at these areas of demand to see, are we going to break through those areas of demand? Are we going to potentially test this prior, you know, kind of bounce spot that we just put in about 15-20 minutes ago? And as we started to run down here, starting to notice the points and the P&L starting to rack up, $100 in the green, $150, $180, $200, and I just simply took off the $200 trade, because with Top Step and with a lot of these other firms, you need to make $100 a day, you need to make $200 a day, and this is just a prime example of, you don't need to sit there and kind of trade all day, right? You can sit there, kind of wait for these trade ideas. Either you're going to lose $200, $300, or you're going to make $200, $300, right? If you kind of take that mindset and that approach and size way down, okay, give yourself more time to let the trade work out, open up that stop loss because of the volatility in this current market condition, you're going to be a lot less stressed, okay? And when I say a lot less stressed, it's very, very important that you you kind of keep that in mind, because in trading, stress is going to be the death of a lot of traders that have a lot of potential. Here's my drawing tool, decides to load 10 minutes later. Because of the fact that if you're constantly under a lot of stress, you're constantly paranoid, you're constantly, you know, chasing big losers or big winners, it tends to make you make a lot of irrational decisions that are going to get you hurt. So now that my drawing tool is finally starting to work here, good. Now that my drawing tool is starting to work, this is the idea that I was looking at. Here's our classic 20 SMA play here. I don't need to go over that. I think a lot of you guys understand that already. But as we pull back into this area of support, you know, I'm looking at the potential bounce. Now, one person could be thinking, well, you know, there was a support here, there's a support here, there's a support here and here. What makes you think or know that we're going to bounce from this level here? And the answer is I don't, right? We could have easily bounced from here. We could easily have bounced from here. We could have easily bounced from here or here. You have to allow the facts, meaning the candlesticks that are being printed on the screen, to show you what we're doing. And as we come down into this area and we fail to close below and we fail to continue down to the next area of support, once you start to see this green candle and you do start to get that closure back over this little range and the confirmation, you can now tell that this is a dead cat bounce. So if this is considered a leg down here, and this is your dead cat bounce, maybe this is potentially either going to be a double bottom, which is forming right now, or it's going to be the start of a second leg down, right? Which I can see that happening. Now, As soon as we start to bounce, okay, yes, there's a little bit of a flag pattern here, okay, but as soon as we start to bounce, we can actually take a sneaky little area for that short, because you can see this candle is the one I'm talking about here, where it fails to close over the 200 or over the 20 SMA. It wicks above the 50, gets rejected, and starts to pull back down. I can use a stop loss here, here, or my 75 points, right? I'm firing a short position here, only trading 2 micros, and I'm just sitting in the move, guys, until I get something close to a 1-to-1 or even a 2R trade. Right now, there's not going to be a lot of times where I'm really looking for 150 points in this example, but if I can get something to 40, 50, 60 points, just slightly a little negative R to R on that, I'll be okay with it. If I can get 1-to-1, that's even better. And again, because I'm looking for so many points, I'm trading such small size, there's essentially no stress here. I mean, I think at one point in time, the most I was down was 80 or 90 bucks here. And normally from trading those mini contracts, you know, to be down 80, 90, $100 is only 5 points, right? It's only 5 points when you're trading minis. You're trading one mini at that. So when you size down into trading those 1 or 2 micros, yeah, you're not going to take profits at 5 points or 10 points. You're going to wait for more of a continuation type of move where you're looking for 30, 40 points, 25 points, 50 points, so forth, 100 points even in these conditions. But the drawdown is a lot less stressful and you can manage it a lot better. So as soon as I fire the short position in here, I don't have to do anything but sit on my hands. Like, you know I'm either going to get stopped out over here or I'm going to make money somewhere down in this range. That's it. There's only 2 things that can happen here. Now, what I see a lot of traders doing and what a lot of traders are, getting in trouble with is they're trying to be too picture perfect. They didn't jump in short here, and now the market's kind of going down a little bit, and they don't really want to, jump in anymore because they feel like they're late. Guys, the trade idea is a trade idea. Either it comes back up here or here and stops you out. You're just assuming a little bit more risk. If you need to trade less contracts so you can assume that more risk, then trade less contracts. And the only other thing that can happen is that you can either come down here and test a double bottom, or it can put in a new low and maybe come back down to this range. So you're going to make money, you're going to lose money, right? It sounds very simple. So you need to ask yourself the question, well, if it sounds so simple, right? And again, I'm not saying trading is simple, but the ideas are very simple. The methodology is very simple. If you know you're going to make money or lose money and you're comfortable with assuming the risk, why are you getting so antsy and so like rushy when you're in these trades to either cut a small loss or I mean to cut a loss that potentially is small that you could have actually made money on? Or why are you so quick to take profits when you're trading, smaller size? Wouldn't it be more beneficial to just allow the facts, meaning what's going on in the charts, to tell you when to take profits and when to get out? Guys, if you want to trade with me each and every single day live, you can join Evolution Traders. That link is down in the description box below. If you need evaluation accounts and you want to try to start trading micros and maybe put on some of these ideas, you can get the best available discount that the prop firms are currently offering by using code DAnthony at Apex, by using code DAnthony at Day Traders. You guys can even try Top One Futures, very new prop firm. I like them because they use Project X. I like the platform. I like the lockout feature. That link is down in the description box below. Again, you can compare, Top One Futures and their kind of like whole system and setup the way it is to kind of Top Step. So if you kind of like Top Step, maybe Top One's your guy. If you're more of a quick scalper and you like to be in and out and you don't have a lot of trailing drawdown, then Day Traders or Apex is going to be for you. Make sure to give me a thumbs up on this video, guys. I'll see all of you guys on the next one.